Howdy, roofers, and welcome to Roofer Growth Hacks, the podcast that is dedicated to highlighting those in the roofing industry, learning how they overcame growth challenges with creative growth hacks, and connecting them with others in the roofing industry. I'm your host, Chris Hunter, founder and chief marketing officer of roofingsites.com. I'm also the author of The Ultimate Guide to Digital Marketing for Roofers. Well, I got a little story for y'all. One of the biggest challenges that roofing companies face today is being profitable. That's why we're in business, right? Well, today's guest, Shawn Van Dyke, who's been in and around the contracting industry his entire career, wrote a book called Profit First for Contractors. And he shares exactly how to become profitable today. So be sure to listen up as Shawn shares some really awesome growth hacks. Well, Shawn, thank you so much for coming on to Roofer Growth Hacks. I'm so excited about this. I read your book, Profit First for Contractors, a couple of years ago based on a recommendation from a friend of mine, Greg Martin. He told me that I really needed to read this book. But just thank you so much for coming on.
Hey, Chris, it's great to be here. Thanks for having me on.
Awesome. Well, let's go ahead and jump right into the first question. Why don't you tell us a little bit about yourself, where you started in your entrepreneurial journey, where you are with your company and how you help people right now?
Sure. I think like maybe a lot of entrepreneurs, I don't know that I ever had a plan for starting a business. So I've stumbled my ways through most of my entrepreneurial journey. Looking back now, you can connect the dots, and I was like, oh, I see, now it looks like I had a plan, but I really didn't. So I graduated from the University of Tennessee with a couple of degrees in engineering, undergrad in civil engineering, and then a master's in structural. That's what I wanted to do. I was going to be an engineer. Did the engineering thing for 6-7 years, and then realized, and I like to make fun of engineers because I used to be one. So I'd say, well, I can read plans and design things, but I really don't know how to build anything. Mm-hmm. So I always say that I left the engineering world and got into construction. But the truth is I got laid off from my engineering job, downturn in the economy. And so I had to, was newly married, and I didn't want my bride to think that she married a loser. So I had to go get a job. And so anyway, I stumbled into construction, doing commercial construction, project management for a commercial contractor, but really fell in love with being out in the field and seeing how things actually got built. So did that for a while, then stumbled into taking the engineering and the construction side of things and ended up working for a real estate developer as a construction manager. So I was traveling the country, building big box retail and 200, 300 acre sites and turning them into typical retail developments, which again was great. But by this time, few kids, we had 2 or 3 kids, and my wife was like, I'm glad you enjoy your job, but I was on the road 3 or 4 days a week. So that's when I got the first entrepreneurial idea, which again, I thought, well, I'd like to stay married. I'd like to keep doing this construction management thing. So that's the first business that I started, was doing construction management for developments in my local area. So I'm in Knoxville, Tennessee, in the East Tennessee area. So that was around 2005, 2006, 2007. And it was great. I was doing what I love to do. And then 2008 hit, and banks stopped loaning money to developers. So really quickly, my clientele dried up. By this time, I had already gotten my contractor's license, and I had a lot of friends and family. And during those years of doing real estate development, construction management, they were like, "Aren't you a contractor? Can you take a look at my remodel project or whatever?" And I was like, "Oh, I'm not that kind of contractor." Well, then when I didn't have any real estate clients, people say, "Aren't you a contractor?" Yes, I am. And so we started, again, stumbled my way into a small remodeling business and did that for several years. And then one of my subcontractors, my trim and millwork subcontractor, his business was blown up. We were good friends and we went to church together. And he said, hey, he took me out to lunch one time and said, I've got these big projects coming up and we're really growing. And I think I need to hire somebody to run the company because I don't know how to do the business. Okay. And I was like, you're absolutely right. You suck at when it comes to running the business. Like when your guys are on site, the work is perfect. I could trust them. I was like, but your schedule, your paperwork, your invoicing is always a nightmare. And I said, yeah, you should absolutely hire somebody and bring them in. They need to be systems oriented and just a nerd for business stuff. And he was like, great, I'm glad you said that. I want you to do it. And I said, no, I've got my own thing going on. But he was a really good salesman. I ended up joining that company as the COO. We went from 6 guys to 22 guys out in the field in about 18 months. And all I was doing was putting systems in place, building systems. And that really gave me the idea of like being in construction at that point, about probably 12 to 15 years. I realized, oh, this is systems, and the paperwork and the number side of things are what most construction business owners struggle with. They're great at the field work, but the business side is always, that's not their passion. And so then I left that company and stumbled into it thinking like, well, maybe I can teach systems for other contractors. I didn't even know what a business coach was. So I hired a business coach, and I hired him to help me do this consulting thing. He's like, oh, you don't want to be a consultant. You can set up a coaching program. And this was back 2016. And I was like, okay, how's that work? And so then I started putting the pieces and things into place again, stumbling my way through everything. Oh, what's an email list? How do you build that? And looking around, and no offense that, this platform's a great platform, but I started on MailChimp, thinking like, oh my gosh, I can send out 14 emails all at once, and I thought that was a pretty big deal. I got 20 people on my email list. And so that's, again, stumbling my way through that. And then over time, just built out coaching programs and stumbled my way into doing speaking events at industry events, and then stumbled my way into the Profit First certification program. Ended up working with my coach to be certified in that, because I just think it's a wonderful system. And almost on happenstance, I was telling my coach as I was going through the certification process, I said, Mike Michalowicz, the author of Profit First, as we call him, the OG of Profit First. I told my coach, Mike should write a book for contractors. He needs to change a little bit of the language, because subs and materials for a contractor means something very different than subcontractors and materials for general businesses. And my coach at the time said, oh, well, you should write the book. And I was like, well, what do you mean? I'd write the book. And he's like, no, you should write Profit First for contractors. And I was like, can I do that? Is that legal? And he was like, yeah, Mike he has a program where you buy the license or the rights to it, it's called a derivative copy. And I was like, okay, I guess I'll do that. And 2 weeks, later, I was on a Zoom call with Mike Michalowicz, and he said, here's how it works, and write the book, and let's knock this thing out in like 90 days. And I'd never written a book before. Yeah. So I was like, okay, I guess I'll write a book in 90 days. And I just didn't know that most people take years to do it. And I think that was one of the advantages. So, I obviously had a good framework to work from, and I just put everything that I kind of knew about Profit First and my own experience in there. And the book was really intended as a leave behind, or as I say, a very expensive business card, or a way to get speaking gigs. But I thought, just in case anyone would happen to actually read it, I should probably make it good. And then I launched it and put it on Amazon, and didn't think much about it. And then just from a following that I had on Instagram, it started blowing up, and here we are. That was back in 2018 is when I published it. And for a self-published book, I think we're pushing 40,000 copies.
Wow.
So it's been pretty amazing, but no plan, just continuous stumbling through this thing called entrepreneurship, I guess.
Hey, that's all of us, right? It's a journey. I'm in a mastermind group with 400 other marketing agency owners, and man, we talk about that all the time. We're like, okay, we think we're going this way, but we end up going this way, right?
Yeah.
And it is what it is, right? It's a journey, and its life is about that journey, I think. Let's dig in a little bit on the book and really your systems and what's the difference, because a lot of the people on my podcast here on River Growth Hacks have heard of Profit First, and some of them have implemented it. And honestly, I just interviewed Mike Michalowicz, not on Profit First, right? He came on for his other book called All In recently, and we didn't get to really dig into Profit First. And that's really what he's most known for, I would say, right? So why don't you tell us a little bit about the Profit First system for contractors, right? What's the difference? And just kind of dig into some of those things.
Sure. In general, the profit first system is a cash management system that, if you follow the steps, guarantees profitability. Now, a lot of people hear that and be like, oh, that's just sales speak. But it's based on, the system is more based on, as we say, normal human behavior than it is on accounting principles. But let's start with the math of it first. In general, every financial report in any business follows this formula, and it's sales minus expenses equals profit, meaning we got money coming into the business. Congratulations, you're in business, you're selling something. Then we deduct all of the things our business spends money on, and whatever is left over, we call profit. And that's literally how your balance sheet or your profit and loss statement is organized. And mathematically, it totally makes sense. Money comes in, we go spend some money, and then the thing at the bottom, or the thing that's left over, is profit. If there is any profit, right? If we flip that equation, again, it works mathematically, and that's how the accounting's set up. But if we flip the equation, make a slight little tweak to actually how we actually behave, it makes all the difference in the world. So the profit first method is sales. Still got to have money coming into the business. Then we subtract out the profit, meaning we set aside the money that our business needs, because profit is the reason that you're in business. It's the most important aspect of that. So we want to set that aside and some other things. And then what's left over is the amount to run the business. And if we don't have enough we don't have enough money in our expenses to operate the business, then we shouldn't go steal it from the profit. That's the reason we are in business. We go change the way that we operate. Now, a lot of people will hear that and say, well, it's just a sales tactic. I get what you're saying here. But this is what I always tell people is, if you don't believe me, then that's the way we normally behave. Then we all do this behavior. Forget about the money for a second. We all do this same behavior in the bathroom every morning. So I always ask people, I'm like, all right, what did you do in the bathroom this morning? And I said, hopefully you brushed your teeth. Yeah. So the profit first, you're doing profit first in the bathroom every morning when you brush your teeth, meaning we go into the bathroom, we grab our toothbrush and our tube of toothpaste. And if we have a full tube of toothpaste, then we just squeeze and go. We don't even pay attention to the amount of toothpaste that we put on the toothbrush. And then one day it happens, we run out of toothpaste. So Chris, I'll ask you, when you run out of toothpaste, what do?
I squeeze every single tiny little bit that I can out of it.
That's right. I always say that there's three types of people. You have your rollers, right? We roll it up from the bottom, use our thumbs, push out that little bit more. You get your rollers, you got your countertop smashers, right? Yeah. We smash or we iron it out with the toothbrush or whatever. Right. We get that little bit more, or we have what I call the MacGyvers. You get a pair of scissors or a pocket knife, you cut open the tube of toothpaste, and you get that little bit more out. And that's normal behavior, right? And if you think about it, when we have a full tube of toothpaste, we just squeeze and go. But when we run out of toothpaste, we don't go get a new one. Not yet. We get innovative and we get frugal. We figure out new ways to get some toothpaste out, and that little bit of toothpaste that we get out is enough to get through the day. And if that's enough to get through the day, then that's technically the amount we should use every day. But because we're normal human beings, when we see something full, we don't pay attention to how much is going out. So some people are being like, all right, where's this going? It's the same thing with the bank account. If you have one bank account to operate your business, when that money comes into it and things get tight in business, just the normal cycle of things, we have a tendency to check the bank accounts because we know the bank account tells us the real story. We either have money, or we don't have money. We're not going to call our CPA or our bookkeeper and say, will you run me a profit and loss statement, a balance sheet, and a cash flow statement? Because I got to make payroll next week and I need $30,000.
Yeah.
It's too hard. What do? We go to the bank account and we either have the money or we don't. And so when all that money is in one bank account, but that bank account is our profit, it's our taxes, it's our operating expenses, it's our 401ks, benefits, all of the other things. When it's all in one, it's one big tube of toothpaste and we just squeeze and go. So the profit first system is we want to create individual bank accounts to serve the business. One of those, but foremost, is profit. And then when you make a profit, you're going to pay taxes. So we want to make sure and have a bank account for taxes. We also want to make sure that the owner is compensated. So we have an owner's compensation account. And then the last of the bank accounts is what we call OPEX. What's crazy about that is that's usually the biggest bank account. It has the most money in it, but it's only the money for operating. We've already taken care of profit. We've already taken tax out. So it's a very simplified way of managing your cash.
Okay.
And you can look at any given time into your profit account. And if all of your bills are paid, you know exactly how much money you've made instead of waiting until the end of the quarter, the end of the year, reading a profit and loss statement. And there's a number, maybe there's a number at the bottom, but you see that number at the bottom of a financial report. Then you go to your bank account and those numbers never match. And you think, well, how do I know? Well, in the Profit First system, you always know because it's extremely simple. And now some people might be thinking like, that's a gimmick. It's too simple. It can't work. And I always tell people the reason that the Profit First system is so effective, especially for contractors, is because of its simplicity. We have a bank account for profit. And when we are profitable, we are going to pay some tax. Let's have a tax account. And then we when you dig into the numbers, you have to set up some percentages. Every dollar that comes in is some percentage, your profits in there, your tax and these other things. And so that's where you get into the system part of is what should my percentages be for my business and my market and for the services that we do. There's some number crunching there involved. But for anybody listening that has just heard this, you can start Profit First today without buying my book, without listening to anything more. If you just think about, let's go set up a profit account. Just start with one account at your bank and go put 1% of whatever your bank balance is, go put it into that profit account. And you're not going to miss it. Because you can run your business on the 99% that's left. And then from today forward, every time you get a dollar, put 1% over in the profit and just run that system. And in 3, 6, 9 months from now, you'll be like, oh, maybe it's $100. Maybe it's $1,000. Maybe it's $10,000. But you're like, that money is now free and clear and I didn't even miss it. And if I had kept it in my normal bank account, your business wants to chew up every single dollar that you have. And it will if you don't set it aside. So that's, in a nutshell, that's the Profit First cash management system. And some people will say, well, that's not how you do accounting. And I'll say, you're absolutely right. Profit First is not accounting. It's cash management, and it's based more on human behavior than it is on math.
Interesting. So you've got, and I know the system, so I'm going to call it what it is, the OPEX account, your operating expenses account. You've got a profit account. You've got a tax account. You'd mentioned the owner's compensation account, right? Like a savings account. These are all savings accounts, right?
Well, they can be savings or checking. And that's a question we get a lot. Like, should it be a savings account or checking account? I'm like, what's the simplest thing at your bank to set up? I don't really care. The only thing we're going to pay bills out of is the OPEX account. So that's probably needs to be a checking account. And some people will say, well, I get whatever. My tax account is set up as a checking account. Great, cool. Don't ever we're going to transfer the money when it's time to pay taxes, but just don't spend any money. If they give you a debit card for it, cut it up. You don't have to use it. You don't have to activate it or whatever. So to simplify, just call them all checking accounts, if that makes sense.
Okay. So 1% of every dollar you put in the profit account. What about the tax account?
Well, that's the 1% is where we start. Like a lot of people that'll read the book, and we get into some, obviously some financial stuff of margin and markup and how that works and what you should be charging and how to look at that. But a lot of people will read the book. They'll get fired up because they finally understand the numbers and the financial, system of their business. They understand their business math. And we make some recommendations based on the size of the business. Let's say, for example, you might see in the book, you should be setting, 6% or 8% in the profit account. Okay. And then they get fired up and they go and do that. But I'm like, listen, that 6% in profit doesn't exist in your business yet because you're not charging enough. But people will go in, they will set up their profit account and they're like, I want to be 10% profitable. They'll go and grab 10% and start putting 10% of every dollar into their profit account. Great if you can do that, but that money that's coming in next week or maybe over the next couple of months, it didn't have that 10% in it. So that's why we say start off with 1%. You're not going to miss it and just let that run. And then 3 months from now, 6 weeks from now, whatever it needs to be, when you find, oh, 1% work, then do 1% again.
Yeah.
And then a few weeks or a few months, do 1% again. Eventually you'll work up to 4, 5, 6% in these, in your different accounts, but do it 1% at a time. You will eventually have to crunch the numbers, and you'll find out if you do it slowly over time, then you'll find out like, oh, I wanted to go from 3% to 5% in my profit account, but I didn't have enough OPEX when I started doing that. That tells me that your business isn't generating that 4 or 5%. So now let's hold up, keep it at 3 and go change the way you operate.
Okay.
And then a few months from now, go to that 5%. And when you see, oh, I've got enough money to pay my bills and pay myself, the money must be there, if that makes sense.
Sure. Absolutely. So on the taxes though, like, am I taking 20% out? Am I taking, what's reasonable to start taking out, immediately?
Yeah. Well, here's the thing about taxes, and it depends on, your business entity, whether you're sole proprietor, LLC filing as a corporation, incorporated, whatever, right? You can go and take a look at your taxes. Let's just say let's say it's a corporate tax return, meaning that, you're incorporated. So the government sees your business as a tax paying entity, and even the owner of the business that works in the business may be an employee. We'll just start there. Well, your business filed a tax return and they pay, I'll just make up a number. Let's say they paid $40,000 in taxes, right? And that appears somewhere on your tax filing, the amount of money you had to pay the government. And you took in $1 million in revenue. Well, that's 4%. You take $40,000, the taxes that I paid, divided by the total revenue that came in, and that's 4%. Now, an accountant will tell you that's not how you calculate your taxes. And they would be right, because that's their job. What their job is to do is to calculate, depending on how your business is run, and every business is a little bit different, how did we get to that 40%? And some people would be $37,000. Some people would be 42, whatever. But whatever that number is, some portion of every dollar that came in, you had to pay in taxes. So last year, if I paid $40,000 in total in taxes and I did $1 million, the math is real simple, 4%. And going forward this next year, if I want to do even either more revenue, or maybe I want to even make more money, guess what? I'm going to pay more in taxes. So a very simple way, without having to calculate what my tax liability is, if I know last year we did about 4%, we had to pay about 4% in taxes, and I'd like to make more money this year, maybe I need to set 5% aside. And here's the thing, go through this year, set aside 5%. And then when your accountant calculates your actual tax liability, in this example, let's say we have $50,000 sitting in our tax account, and your CPA is really good at what he or she does. They did some tax planning, saved you some money, and you only owe $47,000.
Yeah.
Cool. I've got $50,000 set aside. I pay my $47,000 tax bill, and I've got $3,000 left over in my tax account. After that tax bill is paid, you know what we call that? Profit. We just move it to the profit account, or you pay yourself as a bonus or whatever it is. Or a lot of people will say, wait a minute, I've got my taxes funded for next year. And so by the time this episode comes out, a lot of people will have hit this hurdle, right? We had to pay our taxes from last year by, March 15th, April 15th, whatever. And guess what? You got to pay your first quarter taxes of this year as well. You get hit with a double whammy. So the profit first system will take, as we say, the mystery and the misery out of paying your taxes. But your accountant will say, that's not how you calculate taxes. And you say, I know, that's your job. But my job in running the business is to make sure I got the cash to pay whatever that is. And let's say in that example, I got $50,000 set aside and my tax bill comes in at $55,000. Cool. No problem. I got 50 grand of it already taken care of. I just got to go get, maybe that's where, wherever else the money is. But usually most businesses, especially construction businesses, in the first year that they implement profit first, I hear this all the time. It solved my tax problems. It took away the stress because we got $1. And I know every nickel or every 4 cents of that dollar was not mine. It was the government's. And I had a simple avenue, a simple system to set it aside. And then I forget about it. And it's there when I need it.
Right. Love that. Absolutely love it. And all of us as business owners, we like to take, and if you do keep it in that one account, you're right. We just end up just taking it and going, okay, well, we need to spend it over here. Let's just go do that. Right. So what's the big difference then in between the main profit first system and then the profit first for contractors system?
Yeah, that's a great question. Here's the main difference in Mike's original, the OG version. He talks about this term called real revenue. And it's the real revenue number. The way that you calculate that is, again, this is in general business terms. You take your total revenue into the business. And we're just talking like on an annual basis to keep things simple. Total revenue into the business. And then you want to subtract out any subcontractors or materials that you either hire or use to run the business. And that will give you an idea. So let's say we'll use the $1 million example again. $1 million comes into the business, and then we pay $500,000 out to our subcontractors and the materials that we use. So what we would say is that's just kind of passing through your business. The real revenue in that example is $500,000. That's the amount of money that you have to manage. And a lot of times we think, oh, I'm a $1 million, $2 million, $5 million company. No, you're not. You're, let's say a $5 million, you're probably $2.5, $3 million company as far as the actual cash that you have to manage, because a lot of it just goes right back out the door. A lot of Mike's equations for what your percentages should be set up are based on that real revenue number. So they would say, calculate your real revenue, and then the percentages that go into profit, tax, owner's comp, and OpEx are based on that number. Well, in the construction world, we think a lot about total percentages. So what I do is there's a translation step to say whatever the amount of money that is, like in the example of the taxes that we talked about earlier. $1 million comes in, we had $40,000 tax bill. That's 4%. We're not basing our tax percentage that we allocate to the account based on real revenue, because it's just simpler to go back to total revenue. So we call it PTRs, or percentages of total revenue, instead of calculating real revenue. But usually it's about a 2x split. So in my version, in the profit first version, in the example we talked about, I would say 4% goes into your tax account. But if you think about if it were, and $40,000 is the bill that needed to be paid. Well, $40,000 divided by 500,000, if we were to subtract out subs and materials, just to keep the numbers the same, well, that would be 8%. 8% of $500,000 is $40,000 versus 4% of $1 million. The dollar amount is the same. It's just, how do you want to look at the percentages? And most contractors, when we look at our P&L, even our net profit, when we talk about it in percentages, is a percentage of all the dollars that we took into the business. So that's really the biggest difference, is the way that we talk about the percentages of allocation to the different accounts. We always translate that back to total revenue. Because it's simpler.
It is. Yeah, absolutely. And that's a good point. If you're getting taxed on 500,000, that's way different than $1 million, right?
Well, I mean, it's a bit, the taxes are going to be based on, again, business entity and the expenses, but that takes a lot of accounting to do that. And what we're saying is, like, whatever the bill is, or whatever the dollar amount needs to be, just divide that by the total dollars that come in. And that tells you exactly a range, it gets you pretty close. Like let's say, Chris, if you and I had the exact same business, right? Do you have kids?
Yes.
How many kids do you have?
You got three kids.
Okay. I've got 5 kids, right? So if you and I had the exact same business with the exact same expenses, and I'm talking, flowing to a personal level, I'm going to pay less in taxes because I got more tax write-offs than you do.
Right.
But in general, you might need to set aside 5% of every dollar. I can get away with setting away 4% because I got a couple other tax write-offs running around. So it simplifies that. Now, don't get me wrong. You're not calculating the dollar amount of taxes you owe. You're calculating, in general, how much money I need to stick aside. And as your business grows and things change, that number will change, but it's pretty simple to do some projections, and you don't have to call your CPA and have them run the numbers. If you said last year, 4% about covered us, I want to do more. I want to do better. And when you make more money, you're going to pay more dollars in taxes.
Right.
So you can say, you know what, if we did 1.5, maybe I need to go to 1.5 million. Maybe I need to bump it up to 5%. Or you can say, no, 4% of 1.5 is still X amount of dollars. That should cover us and get us pretty close. And then let your accountant do the things that you're paying that person to do and calculating your actual expenses.
Okay. Love that. Let me ask someone new to the Profit First, and you kind of touched on this before, someone brand new to the Profit First for Contractors system, right? Do they need to set up like a separate account for their subs and materials? Like just flows right into that and you pay out of that? Or does everything sit in that OpEx account?
In general, everything sits in the OpEx account. OpEx is where we pay most of the operating expenses. Okay. And that is different than on the accounting side, we have income, cost of goods sold. That's usually where a lot of our subcontractors and materials and labor is. You have your expenses for your business, and then you have net profit. That's from an accounting side, from P&L side. Well, again, Profit First, we want to make sure, and we talk about this in the book, we don't want to confuse terms. And so that's why I actually call it operating expenditures instead of operating expenses, because expenses is an accounting term, and I try not to mix the two. But in general, I wouldn't set up, and when I'm starting, I wouldn't set up different accounts to pay subcontractors and material and have all these different bank accounts. Now, that's one of the, I guess, advantages or disadvantages, depending on how you look at it. When contractors read the book and it makes sense for the first time, and they can start seeing their money in these different buckets, if you want to think about it like that, right? They start trying to do job costing with the bank accounts. And I tell them, that is not what Profit First is for. Job costing, that doesn't mean, I've worked with a lot of custom home builders, for example. They will set up a bank account for that project. Sometimes it's an escrow account or whatever. That's totally fine, but that's not necessarily a Profit First bank account. There's nothing wrong with it. I think, that's totally fine to do that. But contractors will start solving their cash flow problems with Profit First and think, then I'm going to apply to everything in my business. I talk to them. They're like, well, one of my 17 bank accounts, and I'm like, whoa, what are you doing? They're like, I'm just following your system. I was like, it was never intended. It was never intended to do, to do that. So that's why I always say, keep it simple. And if it starts to get complicated, you're probably doing it wrong.
Yeah, that's a good point. Because and that's with a lot of systems, right? You could apply different systems to all sorts of things and really overcomplicate it. I love the keep it simple, stupid, right? Methodology there. Awesome. Let's talk about a lot of our listeners to this and people who follow us on YouTube and all that kind of stuff. A lot of them are brand spanking new to the roofing industry. How do they start out? Because they're a little bit smaller, right, than that $1 million, $2 million, $5, $10 million level. How do they start out with all this system?
Well, from a financial perspective, it's very simple to set up a profit account and a tax account. Listen, and it's really hard to be profitable starting out in business. Now, again, you could have 20 years of experience starting your own company, but you've been in it. And I'm not saying that people can't be profitable right away, but when you're starting out, it's more about building up the habit and being aware of the numbers. Because I promise, if you've never run a business before, even if you've been in roofing for a while, until you've produced hundreds of estimates and stood toe to toe with a customer who says you're too expensive, and you're like, I don't think that I am. Like, you just have to put in the reps and to understand and have confidence in your numbers. But I always tell people, when you're starting out, it's so simple. Just set up a profit account and a tax account, because those things are, tied together, and just 1%, and build that up over time. And then you're going to learn all of the other lessons of how to sell and how to drive value and what things make you higher margins. And especially what I say, to roofers is, if you're competing on price, it's a race to the bottom, because there's always somebody else out there that can be cheaper. And when you figure out like, oh, if we sell value, then nobody can compete with us. And value comes in a lot of different ways. But solving the math part of it, this is what I tell people starting out. Work on the math of your business. Everything's hard at the beginning, by the way. So just suck it up, right? Yeah. And you're going to screw a lot of it up. But you can never outwork the math of your business.
Yeah.
That doesn't mean that you say, okay, I need to charge, whatever, 300 per square for this roof or whatever. That's what I need to charge, but I need to get this job. So I'm going to price it at $285. It's not going to give me the profit that I need, but it's going to get me in the neighborhood. It's going to get my guys out there. It's going to get me started. And being aware of like $285 per square. And somebody's listening going, oh my gosh, that's ridiculous. I don't know, right? I'm not doing it day to day, but the example is just being very aware of like the $285 price is not sustainable in the long term. That's not the point of this. The point of it is more marketing. And as soon as I get to 3 or 4 of these projects, I'm going to bump it up to 300. Then I'm going to run with that until I'm the premium person in town. And everyone knows, oh, that guy's expensive, but he's the best around. He or she's the best around. And that's actually what you want from customers is to go, gosh, I don't think I want to pay that price, but what are my alternatives to go with the other guy or the other crews or the people that won't call me back? Okay. And especially for the roofers, they're starting their companies out there. You're going to get beat up on price. You're going to stand toe to toe to a customer. You're going to deal with the insurance agents, and you're going to have to learn Xactimate and all of that kind of stuff, right? But just when you lay your head down on the pillow at night after a long day of beating yourself or getting beat up and think people won't pay my price, I want you to think about this. As long as there are people in your market that are driving Mercedes-Benz, when you get on a plane, if that first class cabin is filled up, and you look online and try to just look and see what all-inclusive resorts charge.
Yeah.
As long as those things exist, people will pay for value. They will pay for an experience, and they will pay it even to a roofer that has to tear off and put back on in a day before the summer storms start, all of that kind of stuff. They want to find the customers that want value. Nobody wants to pay an inflated price, but the best customers just want value. So you got to figure out how to sell it. And starting out, you need to focus on where can we drive the most value? And it may be 6 months, a year down the road before you can get the people, the systems and the other things in place. But if you get in that mentality and just think about every time a Mercedes-Benz passes you or a Land Rover or whatever, just know you're like, that's my business. That's where we're going. That's my client. They're buying an experience and they're buying value.
Love that. Absolutely love that, man. All right. So this is like a ton of information, awesome knowledge bombs just being dropped on us here. But we're going to take a pause right here in between now and the lightning round. Roofingsites.com. Since 2018, roofingsites.com has helped roofers double their sales by getting their marketing right using the 4R roofing marketing system. If you're a roofing company owner wanting to grow your business, be sure to go to roofingsites.com and sign up for a roofing marketing strategy session with me. All right. So we're back from the lightning round. You ready for this, Shawn?
I hope so. Awesome. We'll see.
Awesome. So here's the rule. We have one rule for the lightning round and one rule only. You have 1 minute or less to answer each one of these questions.
You ready? Okay. That's great. No, all right. I was afraid it was like 10 seconds. Okay. 1 minute. Right. Let's see if I can do that.
Question number 1. What is your favorite personal hack? This could be a book, podcast, whatever. Anything goes. We're roofer growth hacks here.
For me, as I've gotten older, my personal hack is to capture the quiet hours in the morning. I'm not talking about, some 4-hour long morning routine or whatever. But again, with 5 kids, there's something magical about getting up early, getting my coffee in, getting the workout in, thinking and planning for the day. And so that would get up early and capture those quiet hours in the morning.
Absolutely. Love that. All right. Second question here, Shawn. What is your favorite business hack? This could be a book, podcast, and again, anything goes here.
Okay. So I'll say a couple of things. Uh, One from a book standpoint is everybody should read Alex Hormozy's $100 million offers.
Yeah.
It's one of the best ways to put together an offer. We're all selling something, and you need to buy that book, follow that framework, and it's a wonderful, wonderful book. So that was number one. And then let's see. Oh, the second one, as far as a business hack, I love to use this, especially for people starting out, is use the word normally. So when I'm selling something and I want to get the job, it's the right project, it's in the right neighborhood, it's the right whatever. I want to tell them what my anchor price is, right? My high price, and get a reaction out of them. If they don't react, I'm going to sell them at that high price. But if they say, oh my gosh, that is way more, and say, well, what I said was normally we charge this, but for you, because you're cool, we like you, and this would be a great project. For you, we're going to charge this. So it's anchor price, get a reaction, and use the word normally in that conversation, because it also gives people status. So that's a little business sales hack, to say the word normally.
Absolutely. Love that. And by the way, roofers, if you listen to this and we do talk on a sales conversation, I'm going to use that hack right there. Normally.
Normally we charge X.
That's right.
That's too much. No, I said normally, but for you.
Love that. All right, Shawn, what is the best advice that you've ever been given, and how have you applied it?
Best advice I've ever been given is always make an offer. If you're in business, you have to be offering something all the time. So every sales conversation, even when it's, they're not going to buy, don't let that stop you from making an offer, because that offer, once it's out there, it lingers, and they may come back to you and buy that thing. Always make an offer. It's the only way to make a sale.
Love that. Absolutely. Well, thank you so much for coming on here, Shawn. How can the Roofer Growth Hacks family get in touch with you and support you and encourage you moving forward?
Sure. You can check out my website at ShawnVanDyke.com. That's ShawnVanDyke.com. You can follow me on Instagram at Shawn Van Dyke. I still say Twitter instead of X. Shawn Van Dyke. Just type in Shawn Van Dyke on Google. You should find all of my stuff. My book is available on Amazon, on iTunes, on Kindle, on all of the ebook platforms and audio platforms. So just go to Amazon and search for Profit First for Contractors.
Love it. Well, thank you so much for coming on here and really just sharing all of your knowledge about the Profit First system, and really Profit First for Contractors, and how we can all use that and become more profitable, because really business, that's what it's all about, right?
Absolutely. If you're not making a profit, you're not running a business, you're running a charity. So set aside and take your profit first.
Well, how about that, roofers? Was that amazing or what? There were a lot of hacks that I took away that I wrote down in my book here. I got to say, I've got two favorites. One, he said this, and I absolutely love this, is that you can't outwork the math of your business, meaning that you can't just go and get more sales or more work, right? If you don't have enough money for taxes, or if you're not being profitable. You've got to actually figure out the math behind your business first, so that you can go out there and you can be profitable from day one. We're all in business to be profitable. So why not actually build your business as a profitable business from the start? And that's really all it is, right? And it's simple math, and it should be simple. So speaking of which, he also said, keep it simple. Don't overcomplicate this system, right? The Profit First system should be a simple system, right? And it shouldn't be overcomplicated. So he gave the illustration of not doing the same system, the Profit First system, for every single job. He actually said it's okay to open up a new bank account for, big, large jobs, right? But don't go through and put the Profit First system in every single one of those accounts. Okay. That would overcomplicate it. You'd have, 20 some odd accounts that you'd have to keep up with. It's way easier to keep up with like 4 accounts. Okay. So highly, highly recommend that, and keep it simple. Don't overcomplicate things. Well, that's going to do it for another episode of Roofer Growth Hacks. I hope you enjoyed this episode and that you connect with Shawn out there on the internet. I also hope that you connect with me on LinkedIn or Instagram or YouTube or Facebook, wherever. While you're out there, go ahead and check out our website at roofingsites.com, and you can listen to other episodes there while you're there. I want to give a huge shout out to our sponsor, roofingsites.com. Since 2018, roofingsites.com has helped roofers double their sales by getting their marketing right using the 4R roofing marketing system. If you're a roofing company owner wanting to grow your business, be sure to go to roofingsites.com and sign up for a free roofing marketing strategy session with me. Also, this past year, I published my book, The Ultimate Guide to Digital Marketing for Roofers. If you're a roofing company owner and you don't have this book in your hands, I will send it to you for free. Just go to go.roofingsites.com and I'll send you a free copy of my book. Well, roofers, join me next time when we connect with another great roofing entrepreneur and learn how they hack their growth. Until then, I'm Chris Hunter. Thanks and gig 'em.